Ever pondered how a virtual currency could change the world? Welcome to the realm of Bitcoin. This isn't just any currency, it's digital, mysterious, and has the potential to revolutionize how we perceive value. It's a story of innovation and financial freedom, of risk and reward. It's a phenomenon that has sparked curiosity and debate across the globe. What's the secret behind its power? How does it work? Why does it matter? Questions abound, mysteries persist. Stay tuned as we unravel the enigma of Bitcoin. Dive into 2008, the year that marked the inception of Bitcoin. As the world grappled with a financial crisis, an anonymous entity named Satoshi Nakamoto saw an opportunity to redefine the financial system. In the midst of economic turmoil, Nakamoto introduced a concept that would challenge the very foundations of our economy. It was on Halloween, October 31st, when a 9-page white paper titled Bitcoin, a peer-to-peer electronic cash system, was sent to a cryptography mailing list. This paper outlined a digital currency that could operate independently of any central authority. The idea was revolutionary, as it proposed a system where trust in institutions could be replaced by mathematical proof. A few months later, in January of 2009, Bitcoin was brought to life. Nakamoto mined the first block of Bitcoin, known as the Genesis block, or Block 0. This block contained a message, a newspaper headline from the Times, stating "Chancellor on brink of second bailout for banks." It was a poetic nod to the financial crisis and the very reason Bitcoin was created. But who exactly is Satoshi Nakamoto? The truth is, we don't know. Despite many attempts to uncover the identity, Nakamoto remains a mystery. What we do know is that Nakamoto stopped communicating with the Bitcoin community in 2010, leaving the project in the hands of other developers. Bitcoin, as Nakamoto conceived it, was more than just a digital currency. It represented a new kind of financial system, one that prized decentralization and privacy and challenged the status quo. No longer would money be tied to governments or banks. No longer would transactions require a middleman. Bitcoin promised a future where financial power was distributed among its users. Its creation marked a turning point, both technologically and ideologically. It was the embodiment of a vision where financial freedom was possible for anyone, anywhere. Thus, a new era of digital currency was born, named Bitcoin. What sets Bitcoin apart from traditional currencies? The answer lies in decentralization. Decentralization is the process of distributing or dispersing functions, powers, people, or things away from a central location or authority. Traditional currencies, for instance, are controlled by central banks, which can adjust the money supply. Bitcoin, on the other hand, operates on a decentralized system. No single institution or government has control over the Bitcoin network. It's a peer-to-peer system where everyone can participate equally. Now let's delve into how Bitcoin achieves this decentralization. It's through a groundbreaking technology known as blockchain. Picture a chain of blocks, but instead of physical blocks, we're talking about digital information stored in a public database. Each block contains a record of transactions. When a block is filled up with transactions, it's added to the blockchain in a linear, chronological order. Here's where it gets interesting. Each block contains a unique code called a hash. It also contains the hash of the previous block in the chain. This makes the blockchain incredibly secure, because if someone tries to tamper with a transaction record in a block, they would have to change the hash of that block and every block that comes after it. This would require an enormous amount of computational power, making it practically impossible. Moreover, the blockchain is maintained by a network of computers, known as nodes. These nodes validate new transactions and record them on the blockchain. This consensus mechanism ensures that everyone agrees on the transaction's validity, adding another layer of security. The combination of decentralization and blockchain technology allows Bitcoin to operate independently of any central authority. Transactions are transparent and can be verified by anyone, but they can't be reversed or changed. This makes Bitcoin not only a currency, but also a system for secure peer-to-peer transactions. So the next time someone asks you what makes Bitcoin different, you can tell them about decentralization and the blockchain. These aren't just buzzwords. They're the foundations of a new kind of financial system. This revolutionary technology called blockchain makes Bitcoin secure, transparent, and independent of any central authority. Ever heard of Bitcoin mining? It's not about pickaxes and caves, but computers and algorithms. Now, you might be wondering, how does Bitcoin, a digital currency, get mined? Just like gold miners extract gold from the earth, Bitcoin miners extract new Bitcoins from the digital realm. But instead of using physical tools, they use powerful computers to solve complex mathematical problems. In the world of cryptocurrencies, This process is called proof of work. It's a critical element of Bitcoin's protocol, the rules that make Bitcoin work. When a miner solves a problem, they create a new block of transactions on the Bitcoin network, which is then added to the blockchain. The moment a miner adds a new block to the blockchain, they're rewarded with a certain amount of Bitcoins. This reward is essentially the birth of new Bitcoins. But it's not just about creating new coins. Bitcoin mining also plays a crucial role in maintaining the integrity and security of the Bitcoin network. You see, miners don't just add any block to the blockchain. They validate each transaction in the block, ensuring it's legitimate. This includes checking if the sender has enough Bitcoins to send and that they haven't tried to double spend their coins. In essence, miners act as auditors for the Bitcoin community, keeping everyone honest. But why would anyone want to spend time and resources on this? Well, the answer lies in the rewards. In addition to the new Bitcoins they create, miners also receive transaction fees from the users. These fees can be quite lucrative, especially when the network is busy. However, Bitcoin mining isn't for everyone. It requires a significant investment in computing power and electricity. Plus, as more people join the mining community, the mathematical problems become increasingly difficult to solve. It's a competitive field, and the rewards go to those with the most computational power. So, Bitcoin mining is the digital gold rush, creating new Bitcoins and validating transactions. Bitcoin's price resembles a roller coaster ride, exciting and nerve-wracking. The value of Bitcoin has been known to fluctuate wildly, sometimes gaining or losing thousands of dollars in value within a single day. This volatility is due to several factors including market demand, political uncertainty, technological advancements, and even social media influence. Imagine this. One day you wake up, and your Bitcoin is worth twice as much as it was when you went to bed. The next day, it could be worth half. This is the thrill and risk that comes with investing in Bitcoin. It's like riding a wave, where the highs are exhilarating, but the lows can be gut-wrenching. The impact of Bitcoin's volatility on the market is also significant. Its price movements can influence the value of other cryptocurrencies, which often follow Bitcoin's lead. When Bitcoin's price skyrockets, it can create a ripple effect, causing other digital currencies to climb. Conversely, when Bitcoin plummets, it can drag other cryptocurrencies down with it. Moreover, Bitcoin's volatility can even affect traditional financial markets. It can influence investor sentiment and risk-taking behavior across the globe. For instance, a sudden drop in Bitcoin's price can trigger a sell-off in other asset classes, as investors seek to reduce their exposure to risk. But why is Bitcoin often referred to as digital gold? Well, much like gold, Bitcoin is viewed as a store of value. It's a way to preserve wealth over time, irrespective of what's happening in the world. Its scarcity, much like gold, is what gives it value. There will only ever be 21 million Bitcoins in existence, and this limited supply, combined with increasing demand, is what drives its price. In conclusion, while Bitcoin's volatility may make it a risky investment, it also presents opportunities for high rewards. Its impact on the market is significant, influencing not only other cryptocurrencies, but also traditional financial markets. Despite these wild price swings, its role as a store of value continues to solidify its position in the global economy. Despite its volatility, Bitcoin's influence on the global market is undeniable. What lies ahead for Bitcoin? A question that intrigues many. As we venture into the uncharted territory of digital currencies, Bitcoin, being the pioneer, is likely to pave the way. But what could the future hold? One possible scenario is that Bitcoin becomes a universally accepted form of currency, transcending borders and regulations. Imagine a world where Bitcoin is as commonplace as the dollar or euro. The potential for a global digital economy is tantalizing. Yet this is not without its challenges. Regulatory hurdles, security concerns, and scalability issues all pose significant obstacles. Governments around the world are grappling with how to regulate cryptocurrencies while ensuring the security of their financial systems. The sheer computational power required to process Bitcoin transactions also raises environmental concerns. Moreover, the volatile nature of Bitcoin's value is a double-edged sword. On one hand, it offers the possibility of high returns. On the other, it introduces a level of risk that many are uncomfortable with. Despite these challenges, innovation is at the heart of Bitcoin. Its underlying technology, blockchain, is being explored for myriad applications, from supply chain management to secure voting systems. So, what does the future hold for Bitcoin? The truth is, no one can say for sure. But one thing is certain: Bitcoin has sparked a digital revolution that shows no signs of slowing down. Regardless of the uncertainties, Bitcoin's journey in reshaping the financial landscape continues.